So welcome everyone to this evening's lecture. My name is Damien Field and I'm on the Sydney Southeast Asian Executive for Research Training, as well as the Head of School for Life and Environmental Sciences. And it's my great pleasure to introduce the first, which is our primary speaker for tonight, and that is Ben Thompson. And so Ben is currently a postdoc at the Sydney Southeast Asian Centre at the University of Sydney, and his research is really investigating the role of the private sector in financing environmental management. Much of his research has been conducted in coastal environments in Southeast Asia, and particularly mangroves forests, which I'm very pleased because obviously I'm also a soil scientist, so anything to do with mangroves I think is really quite useful, because not only is it where we deposit our soil, it's the land of the future. And he's also got a PhD from the National University of Singapore, if that's correct, and also a Master of Science from the Imperial College London. He's also worked for the conservation organisations in Bangladesh, and in January he'll be, sadly for us, but he'll be starting a lectureship in Monash, but I'm sure he will keep in contact with the centre while he's down there. So Ben, I would like to hand the floor over to you so you can do your presentation. Thank you. Thank you.
Okay, good evening. Thanks for coming along, and thanks to the Sydney Southeast Asia Centre and the Sydney Environment Institute for hosting this event, and also to Damien and to Sophie for playing their role. So in the first part of tonight's seminar, I'm going to be explaining some recent shifts in how environmental conservation is being financed. And then in the second part, I'm going to showcase some novel financing strategies that are emerging, as well as some of the political, institutional, and economic issues that may arise during their implementation. I'm going to start by showing this slightly provocative version of WWF's famous panda, who looks slightly less adorable here. What I'm portraying with this image is that conservation is becoming increasingly corporatized, whether it's a shift in the actors that are financing the projects, whether it's the emergence of approaches that value and commoditize and marketize nature, or whether it's the fact that the majority of WWF's board members are corporate CEOs. I should say here that WWF is a bit of a scapegoat in this situation. It's true for other big conservation organisations as well, regarding who they partner with, who they accept money from, and who sits on their board. Now, whether the corporatisation of conservation is a good thing or a bad thing is something we can maybe discuss a little bit later. But for now, I'm just going to explain how we got to this stage. When I discuss conservation finance, I'm referring to any money that is spent on sustainable management, conservation, or restoration of the environment and biodiversity. And this has traditionally stretched from philanthropic donations to market-based mechanisms, all the way through now to actual investments that seek a financial return. Traditionally, of course, it was the public sector where most of this money came from, government treasuries, directing money to the environment ministries, agencies, and they channel it to conservation projects on the ground. And then this is usually topped up from the civil sector, so philanthropic donations and grants, from people like the Global Environment Facility. For this decade, we've increasingly heard the mantra that conservation is experiencing its own financial crisis. There's not enough money to stop species going extinct. There's not enough money to prevent habitats being destroyed. This bar shows the total amount of US dollars that is spent on conservation globally. It's about 50 billion. But this bar shows the amount that scientists estimate needs to be spent on conservation if we're to significantly address the environmental crisis. So here it's about 150 billion. This is actually the minimum end of the range, which actually stretches to about 400 billion. Now, indeed, these numbers are very coarse, but it doesn't really matter what calculation method is used and whether these numbers appear in supranational reports or journal articles published in outlets including Science and Nature. this number is always in the hundreds of billions. If you want something a little bit more refined, you might be interested in the United Nations Biodiversity Financing Initiative, or BioFin. So this is being conducted in these countries around the world, and it's offering country-by-country analyses of the amount of money that each government spends on biodiversity and the amount that it needs to spend in order for them to significantly meet their national and international biodiversity targets, such as those stipulated by the Sustainable Development Goals or the Convention on Biological Diversity. So this is factoring in things like the amount of money that is channeled towards environmental budgets, project spending, and trends in biodiversity loss and gain. And of course, huge imbalances are anticipated. Further evidence is provided by conservation practitioners on the ground. So this was a recent ABC radio broadcast, and also by changes in the environmental budgets. I believe that since 2013, Australia has seen a 39% reduction in its environment budget. We've got Scott Morrison doing the same with the lump of coal. And in case you haven't heard, the situation isn't much better in my country either, although not just because of issues surrounding the environment budget. Now, conservationists are starting to partner with the private sector to fill this void. So we're increasingly seeing actors coming into this space, such as conservation-focused corporate foundations, environmental impact investing firms, and international conferences that are bringing biodiversity and business into conversation. As I alluded to earlier, the big conservation organizations are also increasingly being run like corporations. They have tremendous revenues and a huge number of assets. Many of these big corporations, many of these big conservation organizations own tremendous swathes of land in the Americas, for example. So they're very, very wealthy in terms of their revenues and assets. So we've got an increasing dialogue emerging between conservationists, corporations, and investors, and this is leading to the inception, the development, and the implementation of conservation approaches which are corporate finance, market-based, or for profit. And this is very much my research space, so I investigate the role of the private sector in financing conservation, and I'm particularly interested in these three mechanisms: payments for ecosystem services, channeling CSR money towards conservation and restoration projects, and, if you like, the cool kid on the block, impact investing. So I'm now going to showcase an example of each of these from some work I conducted in the Philippines, Thailand, and Kiribati, as well as highlighting some of the challenges that emerge and arise when we try and implement these. A few fundamentals before we begin. Ecosystem services are defined as the benefits that humans obtain from nature. So a classic example would be the pollination services that insects provide to the agricultural industry. For example, one species of quill palm tree is pollinated almost entirely by one species of weevil. If that species of weevil goes extinct, that could have huge ramifications for that sector. Another example would be the climate change mitigation services that vegetation provides because it sequesters carbon dioxide from the atmosphere and stores it as biomass. Payments for ecosystem services schemes are used to incentivize landowners to conserve their natural land rather than convert it to an alternative land use that can generate revenue. So I'm now going to provide a little diagram to show you what I mean, using an example from the coast of the Philippines. Imagine we have some local people who own land upon which there are mangroves. They may have two choices: keep the mangroves standing, a situation in which they won't make any money, or cut the mangroves down, excavate fish ponds, farm fish, sell the fish, and potentially make lots of them. And in Southeast Asia, at least, history suggests people tend to choose the latter. But what if there was a third option? What if they could keep the mangroves standing and still generating income, for example, by selling carbon credits, which might be paid for by a corporation that wants to become carbon neutral. If this option was on the table, then maybe these local people would do this instead. But assuming these are economically rational actors, this is only going to work if the mangrove carbon value is greater than what is the opportunity costs or the aquaculture profits. So this is the premise for the case study that I'm now going to present. I'm essentially going to calculate these green dollar signs and these red dollar signs, and then we'll compare at the end. So this all starts with a carbon stock assessment, going into mangroves, getting very muddy, taking soil cores and measuring trees. This was conducted at 2 sites in the Philippines, 1 and 2. This is the amount of carbon in the above ground biomass, the below ground biomass, so the roots, and in the soil. The differences are due to different species compositions, densities, etc. An average was taken, and the units are tons of carbon dioxide equivalent. Fact of the day, 1 ton of carbon dioxide equivalent is the same as 1 carbon credit, which is a metric that I imagine most of you will be familiar with. Importantly, this is the amount of carbon, the total amount in this ecosystem, but this is not the same as the amount that can actually be traded and sold as carbon credits. Because when mangroves are converted to aquaculture, some carbon will still remain in the system. Therefore, we need to model the emissions over time, which is shown here. So we assume that the PES scheme will run for 25 years. And this shows the amount of carbon at time 0. And assuming, it's based on a number of assumptions, such as the rates of mangrove loss, the decayed half-lives of biomass, the oxidation rates of soil. This amount will be left at the end. So it's this amount that can be actually sold as carbon credits, and the number to remember going forward is about 62 carbon credits per hectare per year, which this particular mangrove could potentially generate. Simultaneously, a socio-economic survey was conducted of different aquaculture operations. So here the black bars show turnover, the grey bars show costs. These dashed lines are the mean values. Turnover minus costs is profit, shown by the red line, and this is about $780 per hectare per year. So now we have 2 figures. We have aquaculture profits in dollars per hectare per year, and we have carbon credits in hectares per year. So now we need to apply a range of prices to determine at what price each carbon credit needs to sell in order for these profits to be fully offset and landowners potentially to be compensated for keeping the mangroves rather than destroying them. So this is just some simple price modeling, and we can see that it takes a carbon credit price of around $12 for all of these profits to be offset. So is this economically viable? Well, not really at this present time, because carbon is a commodity. It has a market price, and according to the voluntary carbon market, that price hasn't really gone above $5 per credit for the best part of a decade. And therefore, the amount of money that is needed for these carbon credits cannot really be obtained through the voluntary carbon market. And the significance of this is that even though there's a strong rhetoric for PES from think tanks and supranational organizations, sometimes in some locations the economics simply may not work out. Okay, I'm going to discuss a case all about CSR. I'm sure many of you are familiar with the term corporate social responsibility. It basically connotes the ethical, environmental, and social responsibilities that corporations have to their shareholders, stakeholders, and broader society. A classic CSR activity is ecological restoration, aka tree planting day. Get the CEO down, take some pictures of him planting a tree, and get it in the local newspaper the next day. It would be a slightly cynical interpretation. A couple of years ago, I was in Thailand, and I was speaking to a government minister about mangrove restoration, and they said this: in Thailand, there has been tons of mangrove reforestation. We've seen project after project, company after company coming into the plant, and one after another they fail. And I wanted to know why this was. I also wanted to know why, when I open a glossy corporate sustainability report, I see pictures like this. And when I visit the exact same field site, a year later, I see pictures like this. So a bit of context. Mangrove restoration is widespread across the tropics, but it does often fail. And hundreds of environmental science studies have told us that this is because of ecological factors. For example, don't plant mangroves on mudflats because they don't naturally grow there and they'll receive too much tidal inundation and drown. But this only partly answers the question. To fully understand, we need to know why these bad restoration decisions are made in the first place. How do mangroves repeatedly end up getting planted on mudflats? And this requires an institutional perspective. Social science. So institutions are what condition behavior and relationships between human actors. They include formal institutions such as laws and policies, and informal institutions such as customs, social norms, routines, etiquettes, that kind of thing. So I went around and I spoke to about 50 different stakeholders in Thailand around this issue, and I compiled an institutional arrangement. Now, an institutional arrangement is basically where you say, okay, this happens, so this happens, and then this happens, and because of that, this happens, and you can trace how all the decisions are made and how we ultimately get to planting mangroves on mudflats repeatedly. And I call this a cycle of failure. Everyone take a deep breath. This is quite a daunting figure, but bear with me. This is the cycle of failure, and it's composed of 4 phases. 1, 2, 3, 4. And it all starts in phase 1, when the Thai government sets national restoration targets and restoration policies. For example, we want to increase the amount of mangroves in Thailand by 20% by 2030, something like that. Then they assign a government agency to implement this. That's the Department of Marine and Coastal Resources. Unfortunately, that government agency doesn't have the manpower or the financial capacity to plant loads of mangroves across the country. So then in phase 2, corporations come in and finance these activities through CSR. But this shifts decision-making power from the government agency to the corporation with regard to how, where, and when mangroves are planted. So of course, corporations love nothing more than to plant mangroves on mudflats because they can take a picture in the morning of a brown, barren mudflat, plant the mangroves, and in the afternoon take a picture of a lush green mudflat. Ultimately, though, this does result in a restoration attempt occurring, and then of course everyone rejoices. The CSR staff on the ground phone up the CEO, he thinks fantastic, we'll get this in the national newspaper. The people, the local people from the government agency, they call up the environment minister, fantastic, we're that much closer to hitting our national restoration target. And the local community rejoice because they're just happy to have the support of a big, powerful corporation. Everyone's happy, high fives galore, and then in the night, the tide washes in, and the next morning, half the mangroves are dead. But I wanted to know why this keeps occurring. So if you remember the quote from the government minister, project after project, company after company. And I think it's for a few reasons. Firstly, CSR money is readily available in Thailand. It's a big part of corporate culture and stemming from Buddhist principles such as karma. And in addition to that, these restoration events are strategically timed to coincide with public holidays associated with the Thai royal family. So even a disgruntled stakeholder on the ground, a local villager that's seen company after company coming in, and one after another these projects fail, that person's unlikely to rebel against the idea of planting mangroves and trying again in honour of the king or queen, for example. So these are some of the reasons why I think this continues, and so on and so forth. So that there is the cycle of failure. Obviously, it's only relevant in this particular case, in this particular country. But ultimately it shows how, with these new financiers coming into this conservation financing space, we have to be vigilant to the fact that sometimes when the financier changes, that is accompanied by a shift in who makes decisions over how these projects are implemented. So impact investments aim to address a social or ecological challenge whilst delivering a return on investment. This is a simplified diagram of how it works. We have an investor. So this could be a corporate foundation or a high net worth individual, a super rich person. And they make an endowment into a fund, and this fund will be managed by an investment firm or a bank. And then something called a trust is set up, and a trust is a legal entity that allows these guys to partner with, for example, governments, national governments, and other stakeholders in the country where the project is going to be implemented. There'll be then a board of trustees consisting of some of these guys, and some members of the national government, and they will all decide, have authority to control how the investment is made and the sort of project that comes out of that financing. The project takes place, and then ideally it's going to generate an environmental impact that will be verified and reported back to the investor. The investor will be very happy because their investment has made a contribution to the world. And they'll be doubly happy because ideally that investment will have also generated a financial return which flows back ultimately to their bank accounts. But the big question with impact investing is whether or not environmental benefits and financial returns can both be achieved in tandem. So this is the question that some colleagues and I wanted to explore using the case study of the Phoenix Islands protected area in Kiribati, where finance from US-based foundations is being used to support the gazettement and management of a marine protected area. This map is of the South Pacific. The white is the high seas, which don't fall under any sovereign rule. The blue is the exclusive economic zones of different island nations. And Kiribati is composed of 3 island chains, 1, 2, 3, with Pippa, Phoenix Islands protected area, shown here. And how this works is the government imposes a ban on fishing licenses, and therefore fish stocks rise, so that is the theorized ecological benefit. And the money is used to compensate the government for these foregone profits from selling fishing licenses to the fishers that want to fish in their territory. And this is all managed through a trust fund. But it was unclear to us how this venture was expected to make a profit. So from the standpoint of political economy and geopolitics, we investigated this and we make 2 main arguments. Firstly, we argue that in accepting financial aid from these US-based foundations, the government of Kiribati is gradually relinquishing its decision-making power and control over this patch of ocean space. We looked at the different legal acts that have been drafted to support this project. We looked at the contracts that have been signed between different parties, and we did content analysis of different speeches that have been made by some of the key players. Among other things, we learned that the non-government side, non-government actors have a majority of seats and therefore majority voting power on the PIPA board, meaning that non-governmental actors, people from outside of Kiribati, have essentially control of how this is managed both now and going forward. This is a quote by then President Anote Tong: "Kiribati's representation on the board but does not have a controlling interest." Secondly, we noted that the contracts contain provisions for secondary activities and sustainable development activities. What does this mean? Well, for example, PIPA has its own tourism development plan. The which is supposed to encourage game fishing, go out on the boat, catch the old marlin. And I used to live in Seychelles, where this is quite a lucrative industry. But the tourism market in Kiribati is a little bit different. Kiribati is extremely remote, and even once you get to Kiribati, Pippa is ultra remote. So these logistical complications mean it's difficult to really conceive how this could ever generate a significant return on investment. We also noted that Pippa happens to sit above some of the most cobalt-rich ocean crust in the Indian Ocean, and that its board of trustees contains the scientific advisor to one of the world's first deep-sea mining companies, activities of which are shown here. A little bit controversial, and we do have a little discussion on this against the backdrop of contemporary topics such as ocean grabbing and the blue economy. But ultimately, what this shows is that, again, despite the rhetoric, it may be difficult for impact investments in biodiversity conservation to generate a financial return. This is inviable, and this isn't marine conservation at all. And it could be a similar case for the Rhino bond. So this is a recent initiative, a $50 million debt financing to a green bond, which is going to be issued early next year. The idea of the Rhino bond is that it will generate ecological benefits in the form of a 65% increase on black rhino populations at 5 sites in Kenya and South Africa. I'm not going to say too much more about the Rhino bonds today, but if you're interested, you can check out my blog article. Okay, so I hope I've given you a little bit of background and context on how this environmental conservation financing space is evolving. I do advocate scrutiny going forward because there's a lot of strong rhetoric out there, but it's important that these initiatives are implemented with environmental justice and equity at the forefront. And finally, I am going to be in Australia for years to come, so I'm very happy to connect and potentially collaborate with any people here at the University of Sydney, even after I have moved down to Melbourne. So thank you very much for listening, and I think we'll now have a bit of a discussion